Thank you, everyone. And a pleasure presenting today, and thanks to all of you for taking time out on a Saturday that isn't pouring rain or snowing in Vancouver in January. A little bit about Sabina and Back River. And again, 10 minutes isn't a lot of time, but myself or Nicole Holler would love to talk to you a little bit more about it later in the day. And for those of you who are at Roundup, we've got a core shack, and we'll be able to highlight some of the discoveries that we've made. Again, I will be making some forward-looking statements, and this is the normal cautionary information that goes along with this. If we look at Sabina and Back River and how we think we can bring value to our shareholders, is really four corners. The first is really it's a world-class project. These are the highest grade undeveloped open pit gold mine in the world. Annual production of 250,000 ounces a year for the first 8 years, 200,000 ounces a year over the life of mine, 12 years, on 2.2 million ounces that we've converted to our reserves. We have a total resource of measured and indicated and inferred of about 7.2 million ounces at over 6 grams. The economics of this, again, are very high, 24.2% after tax at $1,150 gold. And again, we're fortunate that we're able to use a base case of $1,150. And again, we'll talk about what current gold price and maybe even future gold price could do for this project. When we look at the capital costs going forward, and we look at that as a percentage of our market capitalization today, again, I think we're the best unfinanced development project in that realm. But even though that we have a large resource base and high-grade reserves, what we have done is shown that this district that we own, it's an 80-kilometer-long banded iron formation, that we've yet to uncover all the secrets within that. We've made 3 discoveries since our feasibility, since our reserves. They all have one thing in common. They're all, on average, arithmetically, about 50% higher grade on a drill hole basis than what we've got in our existing reserves today. So a lot of those, and certainly within the inferred, we see some low-risk conversion opportunities. This is going to be a multi-generational asset, and when you look at the deposit type, and again, there's very strong evidence for that. And continued greenfield and generative exploration potential. One of the things that used to be said about from discovery to production, it was 10 years in this country. Well, it's not anymore. It's certainly much higher. If we take a look at, for us to be able to de-risk this project through feasibility, we've got over 500,000 meters of core into these deposits. And we now are shovel ready and have all of our Aboriginal agreements in place that we can start building this operation at the right time. Well, the good thing is that behind us, the bad thing is that was over 5 years and closer to $40 than $30 million in garnering that social license and the permitting in both federally and territorially. We have a strong balance sheet today of about $50 million. We've de-risked this project, but again, I think we still have some more things that we need to do in order to show people and give people more confidence in this. But a big part of this is, the great asset without a great team to be able to move it forward it doesn't work. And I think we have a team that has shown not only are we successful in being able to understand the geology, grow the resource, but also we've taken this expertise and learned from other projects that we've worked on in the past. If we look at banded iron formations, this is in the world. We're now the 6th largest. Other than McLeod, which isn't in production, it's a Agnico Eagle mine that is in the late stages of construction. The 4 that are larger than us have one thing in common. They've been in production for years. And in the case of the Homestake lead mine, over 100 years. Homestake never ran out of gold. It ran out of economics at close to 9,000 feet of depth. These tend to be deep-seated deposits that, when they're properly formed, they tend to go on and do go to great depths. And again, I think that we can show that some very good analogies between our deposit type and some of these others. The deposits that we have in our feasibility are very well drilled and very well understood. I don't think there's another developer out there that can say 80% of their life of mine open pits are in the proven or the highest category, and 72% of our total reserves are open pit. And again, a big benefit from open pit to underground, again, just from a cost perspective. And if you look at the table on your right, you'll see since we've acquired this asset in 2009, first discoveries were made in the 80s, is we have continued to show that we can grow this resource. And again, we haven't done a resource update in some time, and with these new discoveries, we're confident that that is going to continue on that trajectory. We talk about a district. One of the benefits of working in Canada's north and being an early mover is you can acquire, vast land positions. And if we look at the 80 kilometers of banded iron formation, we own all of that outcropping or near surface iron formation within that 80 kilometers. What I've talked about our reserves is on the lower right on what we see in the Goose project. Outside of that is the George project, which is in the top left of the iron formation, and that's about 50 kilometers away. We have another 1.1 million ounces at just under 6 grams, another just under 1 million ounces at 6.2 grams of inferred. So 2 million aggregate ounces that are outside of our mine plan. We haven't set foot on this since I've been the CEO of this company. We've been focusing on really what is within a 3 or 4 kilometer radius of the proposed plant. This is future growth, this is future upside. These are likely additional mines within this belt. In order to permit and move projects forward today, again, it's a long process. It's a complicated process in Canada. What I can say is we've successfully navigated through that, not only from the federal, the territorial permits, the major licenses, but also with our partners with the Gatitkmet Inuit Association. And they have shown to be unprecedented partners, and the support for this project, I think what they've seen in writing in the public domain has certainly made us proud to be working in their traditional territories. We look at the feasibility that was completed at $1,150 an ounce with an 80-cent dollar. Rapid payback, a small plant, especially when looked at the total throughput. Again, this is meaningful production when we look at what many are defining as Tier 1 assets. This is in that area. Total cash costs of US $534 an ounce, so an all-in sustaining cost of $620. Even if we include reclamation, which I'm very confident that ultimate reclamation will be much further down the path than 12 years, at $763 an ounce. Again, if we talk about IRR and NAV, if we look at the sensitivity on the right, is today we're right at about 75 cents exchange rate. Today we're between that 12.50 and 13.50, which shows now between 711 and $846 million with an IRR of in that 31.6, 35.5%. Despite its location, which is the logistics infrastructure, the biggest challenge in this project, we're shown that, again, having the highest grade pits in the world certainly make them economic. What we have done is been able to show that with our discoveries at what we call Navoyak, within the Vault and Llama Deep, all of these, again, if we look at the average grades, are significantly higher than that 6 gram that we've seen from our open pits and underground in the feasibility. And also what we've shown is the likelihood is that we are going to be able to interconnect these. Again, each season of exploration, we've shown additional potential. If you look at the iron formation here, and again, I think we've done a good job of trying to connect that Goose to the pit to the underground and what we think is potential interconnectivity. What we're doing right now and on site today is continuing to de-risk this project. Again, the location infrastructure, we built our port successfully last year. You can see a photo of that in the center. Today, we're actually in the midst of building our winter ice road so we can be able to show what's going to cost us per ton mile to bring equipment all the way from Bécancour, Quebec, right to site. We'll also be delivering a fixed price bid or an EPC, a turnkey approach to the operation of this project, and we hope to be able to deliver the results of both of these by the end of March, and at which time we'll be starting another exploration to follow up on our successful exploration in the last 3 years outside of the known reserves. We also own the Hackett Silver Royalty. Again, we have the right to buy that back today. We just don't see the economics in that at this time. That right exists for another 4 months. Again, we believe that that is a significant value for us and our shareholders. If we look today, and this is where you want to be in the top right, that's bigger and that's higher grade, there's only 3 that really stand out. The other 2 are in jurisdictions that would be very hard to compare to Canada and are both 100% underground. When we look at this, it truly is a standout operation. And again, when we look at current share price and upside, this is a company maker and a coveted asset. And thank you very much for taking the time to listen to us today, and hope to have the chance to further discuss the project with all of you.